Good afternoon and welcome to this week's edition of Finweek Money Matters, the show that helps you manage your finances. I'm Nozi Pumbandra. My co-host is Marc Ashton, editor of Finweek, and deputy editor Tandisizwe Mahlutshana. And coming up on the show today, we discuss why South Africa perhaps isn't as attractive as it once was to foreign executives. We then talk about the introduction of the Treating Customers Fairly legislation, which is arguably one of the biggest changes facing the financial services sector industry in South Africa today. Finally, we also address questions from our loyal viewers. We encourage you to call in with your investment and market-related questions. The number to call is 011-384-0598. That's 011-384-0598. Remember that you can read more about these stories and many others in this week's edition of Finweek, which is on shelves from today. And the magazine is also available digitally in English and Afrikaans via mysubs.co.za. At some point in time, foreign executives were falling over themselves to work in South Africa. That trend, however, seems to be waning for a number of domestic and international reasons. In its cover story this week, we look at why South Africa just isn't as attractive as it once was for foreign executives. Joining me in studio is Johan Redeling-Hayes. He's a partner at Heydrich and Struggles and loan sharp labor economist at Adcorp. Gentlemen, thank you so much for making the time to join us. Perhaps, Johan, let's start off by painting a big landscape or painting the picture here. Why is South Africa becoming increasingly unattractive for foreign executives that could perhaps choose another destination for foreign posting?
I've read your article, your good article in Finweek, and I understand where that's coming from, but our experience is not what you have found. We find a sustained interest in South Africa for two reasons. The one is at the top end. Senior chief executive candidates get protected from many of the things that we regard as problems in the country, and they come here so well paid and so well provided for that it doesn't matter. And lower down the hierarchy, many of the people who are coming back are expat South Africans, and they come back not because of the problems in the country or they come back for family reasons or because they want their children to be with their grandparents, that sort of thing.
I was about to take credit when he started off and said, I read your article, and then when he went negative, I was like, well, that's not my article, that's a Finweek article. But perhaps, Lon, I mean, your view of this, are you seeing that there's a reversal of a brain drain in South Africa, or are you seeing another trend altogether?
Yeah, there were two waves of immigration from South Africa of high-skilled professionals, one in the 70s and one in the 90s. And during the 90s, about 1.5 million South Africans emigrated, mostly with high skills. And over the last 5 years, we have seen that change. About 360,000 of those 1.5 million returned to South Africa. You know, the labor market is very high functioning for high skilled people. So people who are mobile internationally are very responsive to changes in the exchange rate, the cost of living, real wages, and so on. So South Africa still offers an incredibly attractive standard of living to foreign workers in foreign locations. I think the big reason why we haven't attracted more foreigners than we could is that our immigration laws make it so difficult. The Immigrations Act of 2002 and subsequently amended made it very difficult for companies to obtain quota work permits of 40 or 50 positions at a time. And the use of immigration agents has become much more complex and difficult and expensive. So we don't have a climate of welcoming foreign high-skilled workers into South Africa. And that was largely a political response to South Africa's affirmative action goals. In order to retain positions for disadvantaged South Africans, we clamped down on the borders for high-skilled people.
Johan, maybe one of the questions I was debating with Bruce Whitfield, who actually put the article together, is it a case that we're trying to find something that our companies really excel at? We're obviously very good at financial services and we're very good at mining. Mining is a cyclical sector at the moment in terms of it's been through its boom and bust cycles. At the moment it's in a down climate. retailers we don't really excel at on a global level. Is it a case of us trying to find sectors that we really excel at and then being able to attract the talent to lead those businesses?
Yes to all of those. But I think it is a situation where, for example, Sasol, why Sasol isn't, and we're not short of skills, we're not short of technical skills, so why would Sasol go outside? Because presumably they were looking for exceptional leadership expertise. Some of the examples that you've quoted, Pick and Pay and Clicks, those are areas where people were recruited from the outside because we're short in those particular skills. But I think that there's a level of chief executive where these things almost don't matter anymore. If a company wants a chief executive at the top end, they'll pay and they'll bring them, and they'll come. They'll come because of all the things that we know. Good lifestyle, good schooling.
I think the example Sasol's a good one because obviously Sasol, I've read a statistic, it's the biggest foreign investor into the US market at the moment from a capital perspective. It's a decision to take assets outside of South Africa. It's a case of growing that business in the international environment. That requires a very niche set of skills that maybe a lot of the local C-suite don't enjoy.
Exactly. But, you say we're good at mining, so why would Marc Ashton be attractive to us? Why would some of the other people, in Anglo-American? In theory, we should be producing the best mining people in the world. We should be. And some of our top mining people are in Canada and in Australia. So it's the point that I made earlier that was referred to in the article, and that is that the world is flat and people move where the opportunities are. And if it's to a country where there are challenges, you hedge against those challenges.
If we can just pick up on what you said, Lone, especially about those challenges. We've got massive challenges in South Africa. And I think it's interesting to find out why do we have the people that left South Africa all those years ago and are now coming back to the country.
Well, probably the one issue that returning South Africans don't mention is how much more difficult it is to find and keep work abroad. Labour markets internationally are distressed at the moment. They're distressed also for high-skilled people, and many South Africans, I think, found themselves surprised at how insecure the jobs were that they held in English-speaking countries around the world. But the other reason is that the exchange rate of the rand has made it very attractive to return. There's incredible value for money in South Africa. We have one of the most undervalued exchange rates in the world. And as a result, our living standards are, among professionals, the highest in the world at the moment.
So the grass is not always green on the other side. Now, in terms of coming back and finding work, we've got a huge big unemployment rate in South Africa, and it just keeps on increasing month after month. It has gotten better over the past few months, but are they coming back and are they finding it easy to find employment in South Africa as opposed to the countries where they were?
Yeah, very much so. The unemployment rate for the country as a whole is 37%, and the unemployment rate for high-skilled people is 0.4%.
Exactly.
So basically, high-skilled people can find all the work opportunities that they want. There's an incredibly shortage of skills. There are over 500,000 vacancies in the private sector at the moment. About half of those vacancies are in management, and the remaining half are in professional services, accounting, medicine, law, and so on. So there is an incredibly attractive value proposition in South Africa for foreigners and South Africans coming to the country to work.
Johan, let's look at the continental picture. There's a lot of talk about how much economic promise the rest of the continent holds relative to South Africa, especially when you look at some of the growth rates that are being targeted in Africa broadly. Are you finding that talent, and executive talent in particular, is also following that trend of where the highest returns are in Africa? That's where you're going to find talent going?
There's a huge goodwill toward Africa in general, and I don't think people in the United States or in Europe differentiate terribly between the various countries in Africa. The goodwill is toward Africa. I think that some factors that have really played into this have been the death of Madiba and the heightened awareness of South Africa and Africa again. But there's a subtle little one that I'd like to mention, and that is, Lone said that there was a big emigration out of South Africa in the 70s. The people in the 90s, I mean, sorry, the people who left were in their they were 20-somethings. A lot of those people married, had 2 little kids, and now don't have an infrastructure. They're sitting in London in the suburbs, or they're sitting in Australia. They're paying a fortune for childcare, and apart from the cost of it, they miss the family, they miss the cousins, and they want to reconnect. So I think lots of those are coming back for that reason, or for those reasons.
No, one of the things I find interesting is this discussion around executive remuneration, South Africa versus the rest of the world. And I'm going to use the David Constable example just because I know that it's been in the news quite a lot. We look at it and we say that these look like really excessive pay packages. The remuneration boards then turn around and say, but this is benchmarked against it. How are we matching up what is an international expectation versus what a South African business produces?
Oh, it's a hell of a good question. It's very difficult to do. There are so many issues. The exchange rate of the rand is terribly undervalued, which means that for a foreigner working in South Africa, they can't earn the same amount easily in a foreign currency. So the South African rand is a major contributing factor. Living standards, labour costs, costs of childcare, costs of education, all of these things enter into the equation. I think South Africa has lost its mojo. I mean, one of the reasons the rand is undervalued is that we find it difficult to attract skills on competitive terms. Our labour market is in distress and is in many cases dysfunctional. So I think South Africa has lost its appeal, and that's one of the reasons why we have to offer up competitive living standards, competitive pay packages, etc. So I think South Africa is generally undervalued as a destination for foreign workers. Our immigration services don't make it very attractive for people to. The average waiting period now for a work permit for a high-skilled foreigner is 7 years. This is how long it takes to get a work permit if you're lucky enough to get one. So I think we've got a lot of things to do in South Africa to improve our value proposition. And until we do that, wages for high-skilled workers will remain relatively high in South Africa.
In that legislation perspective loan, are there quotas that are affected by the legislation in terms of people coming from overseas and wanting to get work in South Africa? But that whole process is very difficult because our labor law is very stringent because it wants to protect the internal assets. Are there sort of proactive steps and formations to try and say, let's actually sit down with the government of South Africa and the labor market as well as business and say, actually, we agree that business needs those skills and those expertise from people from other places, but at the moment it's very difficult. Do we need to form some sort of an organization that speaks proactively to government and says, let's look at these labor relations act and try and relax and readjust where it might be required or necessary?
It's a great idea. You know, business in South Africa is very poor at lobbying government in general. And partly that's because government is not open to the voice of business, but also partly because business doesn't want to be seen to be critical of government. So those interactions between business and government are very strained and very difficult, even through formal mechanisms like Business Unity and the Black Business Council. So I agree with you. We need more channels in which to engage with the government, but that is true across the board. It's not only in regard to immigration, but it's true of infrastructure, governance, corruption, and all sorts of things, where the government isn't open to private sector opinion.
But in addition to government, if we look at a player like the PIC, Johan, where we're seeing shareholder activism, where a very strong developmental mandate is really being carried out. To what extent, and I know you say that you don't agree with the findings of the article in particular, but to what extent does this create a pushback effect, increasingly making South Africa unattractive for foreign executives?
It does push back, and it does make South Africa less attractive. I think the forces that I'm talking about override some of that from time to time. We keep referring to Sassel and the example of, he didn't wait for 7 years to get a work permit. You know, if they want somebody, they will make arrangements to get somebody. Yeah. And while we're talking about compensation, if I may just say, You know, there are South African chief executives in the league of David Constable. And go and speak to Whitey Besson. And, you know, people like Christa Wiese. And Christa Wiese says he'd pay Whitey Besson double.
A lot more.
Because he's so good. I don't... Outstanding chief executives have a value internationally.
Have we made, as South Africa alone, enough of the time where, you know, the borders were up strongly and where the legislation is increasingly making it difficult for foreign expats to come into country? Are we finding that South African CEOs and executives are actually rising to the occasion? Are we seeing more South Africans heading up big multinationals or not?
Yes, there is a trend, but it's a very modest trend. South African workforces are overwhelmingly parochial. They're overwhelmingly South African, and they don't have sufficient foreigners in them. I mean, if you compare what happens in our financial services industry with what goes on in Turkey or countries that are comparable to South Africa, we find there's an overwhelming or a preponderance of South African talent in these workforces, and that leaves many South African workforces lacking in the skills that foreigners could provide. So I think, yes, it has a severe impact. It's very hard to quantify. What are all the investment projects that we would have undertaken if we only had access to the skills that are needed? What are the economic opportunities that we've lost because we don't have the skills necessary to tap into those opportunities?
Johannes made a question I want to just touch on there, because financial services, I've chatted to a number of the big four banks, particularly in the HR and the talent retention side of their businesses, and their argument always is South Africans are good enough to do the job. And I know it's an emotive issue to bring in foreigners into South Africa. Do we have to get over it and say we have to get the best person for the job?
Absolutely, absolutely. I heard, just departing from the financial services issue, I heard a stunning statistic this week from a South African doctor now living abroad. How many South African doctors are working in Australia? Do you have any idea?
20,000?
10,000. 10,000 South African doctors are working in Australia. We have vacancies in South Africa for 14,000 doctors. 10,000 of those are just sitting in Australia. Those are the people that were trained here, paid for here, and went there. I mean, that's a knockout.
You know, what I found really interesting in the article was how the World Cup, just a singular event, actually had an impact on brand South Africa. Now, when one would look at South Africa now, I'm quite certain international media are probably covering the strikes and in the mining industry, but also the civil strife that we're seeing just in townships and suburbs. How important is, you know, smaller things like that in terms of a global comparison in shaping brand South Africa? And is it going to take another World Cup for us to actually turn the corner?
I'm glad you asked this, because I think that a lot of the criticism that we're expressing about brand South Africa is internal in the country. We're very good at feeling bad about ourselves. The goodwill that I experience when I travel internationally towards South Africa is huge. It is very big. So we see the Marikanas and they see it as well, but somehow it doesn't hit them in the same way that it hits us. And I think we're very good at self-criticism.
Final comment, Lone. Chan didn't do it. Do we need another World Cup?
I think the World Cup was extraordinary. I mean, it represented to foreigners observing South Africa as an unknown destination. It represented just how big the market is here, how many people there are in the middle class. There was a new appreciation, I think, of emerging economies generally and the kind of economic sophistication that they're capable of. We're going to see the same thing in Brazil in 2014. I don't think it will take, all it will take is a turnaround in global commodity prices to lift the South African economy out of the doldrums, and we'll all be in a much better mood as a result.
And we'll all be in a better mood as a result. Thanks again to our guests, that being Johan Ridderling-Hayes, partner at Heydrich & Struggles, and Lone Sharp, labor economist at Adcorp. Time now for a quick look at our Finweek Trade of the Week. This week's Trade of the Week is Whole Sport. The last time we had a conversation about Whole Sport, Mark, again, if I remember correctly, you were pro-buying Whole Sport. You're holding that position?
Yeah, it was interesting. We were just chatting resources now. So I had to toss up this week between Exaro and Holdsport itself. And Exaro is interesting, and obviously people are liking the story there, but it's just the share price is not responding. So, you know, you come back and you look at domestic retailers and you look at them, they're incredibly expensive at the moment relative to the peer sector. Holdsport comes in I think it's trading on a P of about 12. Going forward, it's down at 10. You've got a dividend yield of 5%. Nice solid brand. It's a growth business. They just represent something that, you know, is quite niche and quite unique in the listed retail space.
Tanya, I see you nodding emphatically, but before you add your sentiments, I mean, one should be cautious of stocks that are consumer facing in the main now, with the rate hikes and consumers becoming increasingly under pressure, but you guys seem to be wanting to buck the trend on this one.
Yeah, look, I mean, I don't think it's going to be an easy ride, but if you look at Holdsport, it's a cash business. You buy cash, no credit, nothing, but their products are relatively, you know, high priced. You know, it's some are specialized sort of sporting equipment and camping gear and all of that. So, you know, there are some retailers that are sort of top high end, and if we get an indication from them that the consumer is still, you know, relatively spending the money, you can pretty much get an idea that actually the likes of Holdsport are also not gonna struggle going forward. So yes, I'm definitely.
You're in the trenches with Marc on this one. Just a quick one before we move on, Marc. Your outlook for the retail sector broadly, especially in light of you know, commentary saying that we might see a 200 basis points hike before the year's over, and obviously we have Jill Marcus coming saying that's an absolute exaggeration. Where do you see this going and impact on the retail sector?
I'm not sure Jill Marcus can. I don't agree with Jill Marcus that we won't have rate hikes. I mean, we were saying a couple of months ago we weren't going to have a first quarter rate hike, and she surprised the market there. I think there's a lot of things happening in the global currency market. I mean, we saw Ghana added 200 basis points yesterday. You know, people are trying to react to very liquid markets at the moment. I think consumers under pressure. I mean, my official French actually tweeted it the other day that every discussion she has with her friends at the moment, white middle class, everyone is saying, how do we cut back on our expenses? And it's true, that's a discussion that's happening around the table at the moment. So retailers, I think it is going to be tough. I think there's a little bit of buoyancy in the credit, in the cash market, in the middle class, but the credit market is going to be tough.
The market's going to be tough, but a definite hold or definite buy for Holdsport. That's from Marc Ashton and Tandisizwe, also putting in his emphatic nods and agreeing with Marc on that one. Time for us now to pay the bills. We'll be right back right after this short break. Welcome back to Finweek Money Matters. Now, arguably one of the biggest changes facing the financial services sector industry in South Africa is the introduction of treating customers fairly legislation, which will place the consumer front of mind when it comes to offering products or services or advice. One of the key concerns, though, is that the legislation may negatively impact advisors and disintermediate the very people who it was supposed to help. Sean Watkins is the head of Stanley Lisp, and Owen Komo, executive partner at Inkunzi Investments. They join us at the desk for this discussion. Gentlemen, thank you so much for the time you've taken to join us. Sean, maybe let's start off with just putting the bones on the ground. There seems to be a lot of confusion around this piece of legislation. What in essence is being proposed, and how is this likely to impact the industry negatively, as we've said in the intro?
Yeah. Good afternoon, Sipa, and thank you for having me. The Treating Your Customers Fairly Policy and Act is basically an act to regulate market conduct in the industry. It's to ensure that financial services providers treat customers fairly. And that is the essence of it.
Why has it created such confusion? I mean, it seems as if financial services institutions in particular are a bit confused about the scope of this legislation and how far it actually is going to be impacting into their work and the industry broadly.
Yeah. Nosipa, from Stanley's side, we don't believe there are any confusion. Treating your customer fairly is a cultural thing. It's your DNA. It's the way you do things. When you look at product, when you look at and putting proposals forward to clients. It's the way you talk to clients and advise them and provide them information afterwards. I don't believe there are confusion about treating your customers fairly.
I think one of the challenges that the industry is going to face is whether it's going to squeeze out the smaller players in the market versus whether it actually plays into the bigger operators rather than the smaller advisor type models. I think there's a concern that trying to look after, traditionally a financial advisor, I think we were discussing it off air, could have 250 clients and see them occasionally. This kind of legislation is going to see them having to look after 150 clients and making sure they get it right every time. I think that's a fair comment.
Mark, I believe, or we believe at Standard, believe that that if you do things right today, and you treat your customers fair today, then it shouldn't change much to how you operate and run your business. Okay. Yes, it brings about a commitment from both the product provider and the financial advisor